Abu Dhabi's International Petroleum Investment Co. or IPIC and its subsidiary Aabar Investments PJS have agreed to pay $1.8 billion to the Malaysian government to settle a legal dispute over the 1MDB scandal. In 2018, the PH government filed a challenge in London against a consent award under which Malaysia was to pay $5.78 billion to IPIC and a bond trustee over 5 years. Then AG Tommy Thomas had said the award was procured by fraud and that Putrajaya should not have to pay the sum. Additionally, it was the government's stand that it had the right to recover the $1.46 billion already paid by October 2018. In a statement today, the Ministry of Finance said the parties have reached a settlement in respect of the legal proceedings in the London Court of International Arbitration and the London High Court. With the settlement, the ministry said Malaysia and Abu Dhabi look forward to continue working together for the prosperity and economic benefits of both countries in the future. According to sources, the deal was struck after meetings over the past 2 years that involved the Yang di-Pertuan Agong, Al-Sultan Abdullah Riayatuddin Al-Mustafa Billah Shah and former Finance Minister Tengku Datuk Sri Zafrul Abdul Aziz. Tengku Zafrul's involvement in the meetings started when he was in the Ministry of Finance. Following the change in government, the new cabinet tasked him to continue the negotiations, which he concluded as the Minister of International Trade and Industry. Pharmaniaga booked its largest ever quarterly net loss as a result of 552.3 million ringgit of impairment of COVID-19 vaccines. In addition, it also wrote down the goodwill of the Indonesia manufacturing cash-generating units of 50.3 million ringgit. Fourth quarter FY 2022 net loss stood at 644.39 million ringgit against a net profit of 85.48 million ringgit in the preceding year. However, revenue rose 21.2% to 862.72 million ringgit. The group attributed the improvement in its top line to healthy growth across its concession, non-concession and Indonesian businesses, thanks to strong customer demand following the resumption of business activities as the COVID-19 outbreak subsides in intensity. This was partially offset by the lower revenue from the sale of COVID-19 vaccines as the country enters the endemic phase. Still, it said aggressive selling efforts on the vaccine stocks are ongoing as the shelf life of the vaccines is still valid. For FY 2022, the group registered a net loss of 607.32 million ringgit, compared with earnings of 172.15 million ringgit the previous year. Full-year revenue slumped by 27.1% to 3.51 billion ringgit. According to a statement it filed with the local bourse, it has become an affected listed issuer under PN17 and is taking necessary steps to address its situation. Touching on its prospects, Pharmaniaga said it expects its Indonesia operations to continue to be the growth driver. On the local front, it said the government has extended the date for negotiations of its concession agreement to June. Meanwhile, it has also registered a 50% year-on-year growth in the private market and aims to maintain the growth in 2023. Moving forward, it is still optimistic that it will be able to record a positive performance this year. Pharmaniaga's shares closed unchanged today at 44 cents, valuing it at 576.49 million ringgit. Maybank recorded a 5.4% growth in fourth quarter FY 2022 net profit on the back of growth in net interest income and other operating income, which more than offset headwinds from higher provisions, impairments and overhead expenses. The group declared a second interim cash dividend of 30 cents. Net profit for the fourth quarter of FY 2022 rose to 2.17 billion ringgit, driven by a 15% growth in net interest income to 3.52 billion ringgit. Its other operating income rose 78% to 1.77 billion ringgit. For the full year, earnings grew 1.7% to 8.23 billion ringgit on an 11% growth in net interest income to 50.91 billion ringgit. Maybank Chairman Tan Sri Zamzam Zairani Muhammad Isa said the group made further progress in growing its customer base profitably, while maintaining commendable overall growth despite 2022 being a challenging year. Meanwhile, Group President and CEO Datuk Khairul Ramli said the commendable growth in Maybank's top line reflects the strength and resilience it has developed in recent years, coupled with the competitive edge gained from its regional presence, diversification and focus on customer experience. Going forward, the lender said asset quality management will remain a priority this year and that it is targeting a return on equity of between 10.5% and 11% in FY 2023 as its headline key performance indicator. Shares of Maybank traded 0.11% higher at 8.75 ringgit for a market capitalization of 105.48 billion ringgit. Public Bank saw its fourth quarter FY 2022 earnings jump by 24.1% as its top line expanded by 24.8% during the quarter. The lender said its net profit stood at 1.71 billion ringgit, while revenue totaled 6.06 billion ringgit, and declared a third interim dividend of 5 cents per share. Net profit attributable to equity shareholders reported a lower increase of 24.1% to 1.71 billion ringgit, compared with the 39.6% increase in pre-tax profit to 2.52 billion ringgit, due to additional tax charge arising from Cukai Makmur. Net interest income and income from the banking group's Islamic banking business increased by 23.2%, whereas loan impairment allowance was down by 68.1%. These were partially offset by higher other operating expenses. For the full FY 2022, net profit increased by 8.13% to 6.12 billion ringgit, as revenue rose 9.23% to 21.43 billion ringgit. Looking ahead, it said the country's economic growth this year should remain on a positive trajectory, supported by resilient domestic demand, although global headwinds caused by elevated inflationary pressure, tighter monetary policy conditions, persistent supply disruption and geopolitical tensions are likely to continue to weigh on the economy. Still, Public Bank MD and CEO Tan Sri Dr. Teh Alik said the economic outlook for the country remains positive, and this will continue to support a conducive environment for growth in the banking business. At the close, Public Bank shares were 0.48% higher at 4.15 ringgit for a market capitalization of 80.55 billion ringgit. PT Resources Holdings has inked a deal to jointly develop a 1 billion ringgit intelligent supply chain park in Kuantan, Pahang. In a burst filing on Monday, it said it signed an MOU with Ocean Exchange Fujian Foreign Trade Services Co. to set up a park inspired by the Marche International Cold Logistics and Cross-Border E-Commerce Project, or Fuzhou Park as it's known in Fujian, China. Dubbed the Malaysia East Coast International Supply Chain Intelligent Park, the project is aimed at driving the development of food and light industries supply chain between Malaysia and Fuzhou, the capital city of Fujian. PT Resources said the project is expected to boost trade between the Malaysian seafood wholesale market and China through digital transformation, while collaborations with cold chain logistics companies will be initiated to facilitate an integrated logistics supply chain. According to PT Resources MD Heng Chang Hui, with this project, the company expects its overseas sales to expand in view of the growing affluence in China, which will contribute to a rise in demand for frozen seafood.